Welcome everyone to the session on catalyzing solar investments through blended finance. Thank you very much for joining in, and it's a pleasure to have you here. We have Abhishek Shah, who is the lead of our financial services, who will open the session, and he will later hand it over to Sarah McKenna, who is going to be our moderator for our panel discussion. I leave it to Abhishek to welcome our distinguished guests and speakers, and thank everyone for making the time to attend today. Over to you, Abhishek.
Sorry. Thank you, Utsav. Am I audible to everyone? Thank you. Very warm welcome to all our esteemed guests and audiences today for this discussion on catalyzing solar markets in Africa with blended finance. It's a topic that's very close to us as an institution and for me personally, and I am thrilled to be having the opportunity to take you through a very brief presentation around an intervention that has been the brainchild of the International Solar Alliance, to which we've been a very proud partners in terms of helping the International Solar Alliance and stitching this intervention together for the markets in Africa in order to kickstart the adoption of solar at a larger scale. That being said, I once again extend a very warm welcome to all of you present in this discussion. Thank you so much for joining us. And let me quickly dive into the presentation for today's topic. Can I request Utsav to please move to the next screen? Our conversation today will be divided into three parts. In the first part, I will take you all through a summary presentation that will focus at a very high level about the intervention that the ISA has in mind for countries in Africa. This will be followed by a discussion, a panel discussion, which will focus around the challenges and the opportunities for investing in solar in Africa. And finally, we'll open the floor for questions and answers from the members of the audience for our esteemed panelists. The purpose with which this intervention has been stitched together from the International Solar Alliance is very simply to enable the catalytic flow of capital into solar sectors in Africa, and by that the ISA has envisaged to put in $700 million directly through this intervention, and by virtue of this investment catalyze many more times of money that would come in as follow-on investments, as well as with the use of this de-risking capital, the prospect that it opens up for other private sector financiers as well as DFIs to start investing into solar and to take on risks which meet their return profiles or which mitigate the risks in order to accommodate the risk-return trade-offs that they see. In addition, the byproduct of that investment is to ensure that there are at least 35 to 40 million additional households in Africa that have access to electricity with the help of this intervention. Now, this objective is predicated on two key strategic interventions that the ISA has in mind. Number one, to create a steady pipeline of bankable projects by de-risking the private sector in Africa, and number two, making the capital more affordable by blending different pools of capital so that the projects are more viable, and that creates economies of scale that leads to larger scale adoption and a virtuous cycle, I beg your pardon. Now, in order to implement the strategy, the way the blended finance intervention from the ISA has been envisaged is to have two dedicated facilities. The first facility will focus on building the capacities of the three key stakeholders, the enterprises, local financial institutions, as well as the government of the respective countries. And this is important in order to sort of look at the project pipeline that is coming up in the countries with the help of coordination that the ISA brings together. So this presentation will be followed by the discussion. This presentation will take about 10 minutes, where we give participants an overview of the intervention that the ISA has in mind. And in the light of that presentation, then we will commence with the discussion and take any questions as part of that.
Great, thank you.
Now, in terms of certain details about how the facility is looking to intervene in Africa, we're looking at deploying close to about $700 million across markets in Africa. The focus remains countries within Africa, but to start with, we could look at 5 or 6 key markets. Indicative markets are sort of illustrated on the slide, but these are subject to changes and modifications based on inputs from the fund managers that we are looking to onboard. The focus segments for the investments out of this fund will be across all types of solar technologies, both on-grid as well as off-grid, and includes any technologies associated with solar as well as hybrid solutions that have solar as part of their solution offering. And the instruments through which the facility is looking to make investments includes not just debt, but also equities and guarantees. And that sort of brings me to the two unique features of this facility that the ISA has put forward. Number one, this facility will take a very country-specific approach to investing in Africa for the development of solar. By that, what I mean is that there is no one-size-fits-all solutions for markets in Africa, as each of them are in different stages of evolution. Some are in their early stages of adopting solar, while the others have a fairly good understanding about how the solar markets are working and therefore are moving towards more complex models to deploy solar solutions. And therefore, the kind of financing solutions that will be needed in each of these markets, consistent with the country's priority frameworks, will be very different. And therefore, this facility will look to sort of intervene in each market according to their nuanced needs. And the second is to cater to these nuanced needs. There is no one instrument or one ticket size that is likely going to be working. And therefore, this facility looks to bring in the flexibility of deploying debt and further to take junior positions in order to de-risk the other commercial investors, plus also take a potential approach of participating in the equity upside or participating in investments through convertible structures and guarantees where required, where those kind of instruments can bring in either the debt providers or some of the more commercial investors that are potentially not targeting this sector because of a higher risk perception, and these guarantees could allay their concerns and allow them to invest or try their experience. Next slide, please. Now, the critical feature of this facility, therefore, is that while we look to bring in this flexibility of deploying debt, equity, and guarantees on a need basis across these markets, is to be able to bring in the different pools of capital together, and that is essentially what the ISA has been able to do with respect to its convening power by gaining interest from all sorts of stakeholders, including foundations, DFIs, global capital pools, to sort of look at this facility in terms of capitalizing, such that the blended cost of funds is lower than what commercial investors could potentially target, and therefore make capital more affordable to providers. And B, there are investors who are looking to take in additional risks in order to bring comfort to some of the senior investors who could then potentially bring in money on commercial terms and invest in solar sector. These monies will be pulled together in special purpose vehicles, and there will be a private sector fund manager who would be sort of managing this facility. The names that you see on the slide are just indicative and are by no means finalized. Likewise, there will be a dedicated TA facility which will be managed by a TA facility manager, who will in turn coordinate with the fund manager of the capital pool in order to ensure that the non-financial services complement the capital deployment activities that the blended facility takes into action. Next slide. The end result of this intervention that the ISA is seeking to achieve over the course of this intervention in the next 7 to 10 years is to mobilize about $5 to $10 million of additional investments as a follow-on to what the ISA is able to deploy through this facility. Number two, to ensure that around 40 million additional households in Africa get access to electricity. And number three, to ensure that there are millions of tons of CO2 emissions that are sort of offset through the deployment of solar solutions in the intervention countries. Next slide. What are the 4 key value propositions or unique features of this facility? I've already talked about the country-specific approach, as well as the exclusive focus on solar that this facility sort of caters to, unlike some of the others that potentially look at the larger renewable energy base. The third key element that this facility is bringing together is the technical assistance component that is especially targeted at working with the governments of the respective countries. And finally, this is not a one-off facility that will deploy capital in some of the intervention countries and sort of look at that as the end result, but this is just the starting point of the facility, and it will continue to deploy capital by raising additional funds in order to ensure that the solar markets continue to receive capital that they need for the larger $70 billion of estimated investment that Africa needs in solar over the course of the next 10 years. Next slide. Now, in designing this facility, we have spoken to a number of stakeholders, including enterprises as well as some of the managers of the existing blended facilities, to understand what has been the key risks and what are the key learnings from the existing intervention. And we are trying to bring on board these learnings in terms of ensuring that the facility is able to meet the end objectives that it seeks to. And in that process, some of the risks or some of the challenges that have been highlighted, along with some of the solutions that this facility is deploying, are indicated for your reference. The first key challenge that has been talked about extensively is the need for risk protection or risk mitigation for private sector investors in this market. And therefore, ISA is lining up a few $1 million in capital commitment from philanthropic foundations that will go towards de-risking commercial investors. The second key challenge that has been indicated often has been around a lack of bankable project pipeline, and therefore, to mitigate this, by its very nature, the ISA has been working with the governments in Africa who have approached ISA with a pipeline of solar projects, as well as willingness to sort of work on various dimensions that will allow more interest from the private sector participants, and therefore create this pipeline that we are looking to build by virtue of, let's say, moving towards interventions like solarizing the government schools or healthcare centers that that respective markets have under support from the respective governments. The second key intervention is with ISA looking to work with the governments to adopt a model framework that will allow private sector participants to sort of come into the sector by making information more freely available. And also with capability that is being provided to enterprises to execute some of the projects within the envisaged timelines in order to reduce risk for investors. Finally, the fourth key element that ISA is looking to sort of deploy is to set up centers of excellence in segments where enterprises could fall back on from a knowledge gathering perspective in order to get a better grip of the markets where they intervene. The third key challenge that has come up has been around a limited understanding amongst local banks and financial institutions in these markets about solar. And therefore, capacity development of these local FIs is also a cornerstone of that the technical assistance facility will cater to. And towards this aspect, it will work very closely with the local development banks in the respective markets. The fourth key point that has come up in the conversations has been that there is very limited participation from local investors. And towards this end, the fund managers will be tasked towards raising part of the capital from the local investors, including the likes of the HNIs and the pension funds. And finally, the one critical feedback that we've been receiving is that the asset size of solar projects in Africa continue to be very small in certain cases, and therefore are falling outside the interest of the institutional stakeholders or investors. To that extent, the envisaged facility could play the role of a platform that could aggregate these smaller projects and create a larger pool for the monies to flow in at a wholesale level. So those are some of the pointers that I wanted to leave with the audiences in terms of getting a feel about the intervention that the ISA has in mind. And with that, I'd request Utsav to move to the next slide so that I can open the floor for our esteemed panelists to join in today's conversation, which is around how do we go about creating a robust pipeline of bankable solar projects in Africa. What are the challenges, what are the opportunities, and what are the financing instruments that are needed in markets like these to enable greater uptake of solar? With that, I'd like to welcome our panelists for today joining us in this conversation. Please allow me to introduce our esteemed panelists to you for today's discussion. Starting with Mr. Jagdeep Sareen, who's the Assistant Director General at the International Solar Alliance Secretariat. He is on secondment from the World Bank to the ISA Secretariat as the bank change issues and green financing for over 17 years across various multinational MDBs and UN, as well as its funding agencies. Joining us on the panel, along with Mr. Jagjeet, is Mr. Asad Mahmood, the CEO and managing partner of Seema Funds. He's one of the longest-serving investors and fund managers in the impact investing industry. Formerly, he has served as the managing director for global investment funds for about 17 years at the Deutsche Bank. Very warm welcome to you as well, Mr. Asad. Third, we have Ms. Mukabanji Mutanuka, who's responsible for coordinating the business and commercial activities for Onji Power Corner, smart mini-grid innovation across Zambia. Prior to that, she's been responsible for technical, financial, and environmental design and development of off-grid solutions in Zambia under the initiative of Power Africa Off-Grid Energy Challenge, where she had oversight of development and risk management of the solar microgrid, microhybrid systems, and distribution of solar home systems. Fourth, on the panel, we have Mr. John Kidanga, the Director of Software Analytics and Customer Support at PowerGen Renewable Energy. He's also on part-time secondment as the Global Clean Energy Lead for COP27 at High Level Climate Champions. Prior to joining PowerGen, John was a senior consultant in Dalberg's Nairobi office. Finally, our moderator for today's discussion is Ms. Sarah Mahina. Sarah works as the Climate Investment Advisor with GIZ. She's a researcher and enterprise development expert with over 9 years of experience in enterprise support, program and project management, monitoring and evaluation, public policy research, and policy advocacy. Prior to working with GIZ, Sarah was a former colleague at Intellicap working on agriculture, renewable energy, livelihoods, and financial inclusion. With that, I hand over the stage to Sarah and our esteemed panelists to take the discussion ahead. Thank you very much.
Yes, I was having challenges unmuting myself. Thank you, Abhishek, for that introduction and for the presentation that has laid a background on what it is we're going to be discussing today. And these are very important topic, and I believe every person who is here has an understanding of where we've come from with the solar market and solar sector in Africa. I think in the last 10 years, we've seen a decrease in the cost of solar products, about 87% decrease in the cost of solar. We've also been seeing an uptake of the solar and an understanding of what solar is. But the thing is that we are still at about 5 to 2% in terms of uptake of solar products. And the question that we need to be answering today, and we will be discussing today, is why is this the case? Why is it that we are not seeing the uptake of solar to the heights that we would have expected? Because there has been the conversation, and this has been ongoing for a while, and we are expecting that, one, we have already attracted investments within the sector, and the private sector has come in, but this funding has not resulted into increased uptake of the solar products and solar PV within Africa. So we will be discussing this with our panelists today, and we'll be looking at challenges and opportunities for funding, and especially what is the focus for us today, which is blended financing. And I'll be starting with a discussion, and I'll go straight into it to throw it to the people, and as someone who has an understanding of the sector from a funder and a person who has also looked at it in terms of an enabler. And this, I will be starting with Mr. Sarin, that's the Director, International Solar Alliance. And I'll be throwing it at you to just begin with a conversation to tell us why blended finance at International Solar Alliance? Why do you think this is the direction that we should be taking to catalyze this as a sector within Africa? Over to you, Mr. Sarin.
Thank you, Sarah. Thanks for that introductory comments, for setting the context. Can you hear us? Can you hear me?
We can hear you. Could we have someone spotlight his video so that everyone can see him speak? And same to the other speakers. Thank you.
Okay, thanks for that. So, Sarah, as I was saying, thank you very much for setting the context for this conversation. And through you, I also want to extend thanks to Intellicap for bringing a stellar panel together. I was telling Vikas Bali that I feel the most lightweight on this panel because you guys are actually doing work on the ground while we're trying to build this international institution to drive the solarization agenda. So what I would do in answering the question you asked is to also update your audience in terms of where ISA is in on the following measures, how the coalition or international organization ISA has grown from where it started, what services it's offering to countries, what struggles we are facing, and then come to why we need the blended finance. And I'll try to put it all together very quickly so that we leave space for others and then discussion. So International Solar Alliance was announced or spearheaded by Prime Minister of India and President France at Paris COP, supported by various world leaders, UN heads, MDB heads. And this started as a coalition of countries within the tropics of Cancer and Capricorn, mostly the countries who have large solar endowment, but haven't been able to fully utilize the potential. And if you see the band of countries I'm talking about, we have most LDCs in Africa in that band. And the proposition was that countries who have started to benefit from solar more, like India and a few others, have an opportunity now to bring together other countries, share experiences, build this coalition, bring finance, technology, drive down the cost of capital, drive down the cost of technology so that the challenges of energy access, security, and transition are met. And they set a goal for ISA as a collective, a goal of mobilizing $1 trillion, and let me repeat this, $1 trillion in solar investments by 2030. And mind you, ISA is a treaty-based multilateral organization. So when countries join, the parliamentary process is actually ratified the framework agreement, which enshrines in it its chapeau that they are collectively taking an obligation to mobilize $1 trillion in solar investments. Now let's look at the numbers. Best of my knowledge, last year, whole of Africa got about $2 billion of solar investments, around 2 gigawatts. And these numbers have been little up or down, but mostly that's where it is. Collectively, whole LDC capacity on solar with SIDS is about 2 gigawatts. While the potential is immense, the challenges are daunting. We have about 600 or 700 million people without access to electricity in Africa. Still, while you and I are using these virtual modes to connect today and enjoy our discussion, our brothers and sisters in Africa don't have the basic access to electricity. And they would remain in that predicament and challenge if we don't change course. And solar is one solution, both on the off-grid and grid side, that can help solve this. So that's brought about ISA. Fast forward where we are today, we have about 48 countries from African continent as members of ISA. So what do members do and what does ISA offer in return? So members bring to ISA Secretariat project proposals or concept proposals where they are seeking assistance from the organization and from its partners in terms of technical and financial support to turn these concept proposals into real proposals, real projects on the ground. And ISA is structured around 9 programs, from off-grid to on-grid, solar applications for agriculture use to solar utility scale solar parks and beyond. And just to give you a flavor of the kind of project demands we have received. So in terms of solar parks, we have received a demand of close to 2.7 gigawatt from countries in Africa to ISA. They are seeking support of new proposals of a capacity of 2.7 gigawatt. For solar rooftop, we have received a demand of close to 1 gigawatt. For mini grids, we have received demands from various countries close to 232 megawatts. And then for solar water pumps, around 200,000 solar water pumps of various capacities. So what do we do at ISA? And then I'll quickly come to the need of blended finance facility and blended finance capital. What we do is we try to bring various technical capacities to bear, send technical missions to countries, use information analytics capacity building offers, and programmatic support, aka turning these project concepts into pre-feasibility studies, helping them do topographic studies, surveys on the ground, bring stakeholders together to lift that concept into a proposal which financiers like Asad and others could look more favorably. We try to be the matchmaker or bring the investment mobilization support to these member countries, bring MDBs, DFIs, private sectors to see which projects could receive funding. But it would not come to as any surprise to you all in this panel and audience that we all are struggling. Money is not going to Africa for solar to the extent we need it. And when I came back to Glasgow, there were like about 300 billionaires who came to Glasgow with trillions of dollars waiting to be committed to green projects. The question we were asking them, is there absorptive capacity in our member countries for all this kind of capital you're saying is available? There is a big gap. This is not the kind of money which BlackRock money would not get absorbed in Zambian mini grid. There is a big process in between of aggregation, finding risk mitigation instrument, blended finance, so that this kind of a money can get the returns they're looking for. So that's where this idea of blended finance comes in. There's a lot of philanthropic capital being committed. There's a lot of investment capital looking for green projects. There is DFI money, and then there is pure play private sector money. What you need is somebody who brings this all together on one end, translates them into the kind of financial instruments which Abhishek very eloquently described, from senior debt down to equity and anything in between, for the kind of interventions you need, whether through enterprises, whether through financiers or aggregators or project developers and all that, and manage this in a process that you provide the return to your investors, but also work on creating a pipeline of projects. So in the last 3 months, I've been having conversation, and by now, with 20 fund managers pan-Africa and from Europe who invest in Africa. Everybody is saying, you being too ambitious. 700 mil for few countries in Africa. Where is the pipeline? We have the money, we can't deploy it. So that's where ISI is saying we're going to work on the upstream side. We're going to work on enhancing capacity of governments, of technicians, of bankers. By now, we have trained about 300 plus bankers in Africa. We're trying to ramp this up. We're trying to work with upskilling missions so the right skills are there to take it forward. With policymakers, with regulators, so that they can translate the ideas in their head into some schemes where budget allocations could be made, where stability and policy framework is there. And then we come in with this facility, and we are, I'll be very honest with you, we are still looking for an anchor investor. We are knocking the doors of GCF, of various impact investors, of DFI, saying, we have a good idea. We have spoken to everyone in this field. This is truly additional in terms of the kind of blending it will do, the kind of leverage it will do at the fund level, the variety of instruments it will deploy. And we, through ISA, will bring our own grant money and grant work to have a pipeline of projects ready where this could get invested, along with other players. So essentially, what I'm saying is, while there is a lot of potential, we all know we don't have the right kind of money, funding right kind of financial instruments in various solar applications, grid, off-grid in Africa, and now hybrids and hydrogen and tech for solar and all that. So this facility could be a true game changer. While it's only 700 mil, but it could bring the kind of catalytic financing required, and the structure is sound. So we are asking for two things. Please give us honest feedback, which elements of it could be refined, and join us in this journey to bring financing to this facility. Play the role of either an implementer, a fund manager, or person who would receive funding and deploy in Africa. Let me pause there, and I'm genuinely interested in your feedback to refine this proposal so that it attracts the kind of capital we hope and deploy it to the kind of action we all want. Thank you.
Thank you, Mr. Shadrin, for the opening remarks that are very insightful. And from what you've said, I want to take it now to John Kidenda. The reason I want to go to John is John is seated on the other side. Is that person we are looking to finance. And this kind of blended financing is targeting innovators like PowerGen and others. So John, you could first introduce PowerGen to us and what you're doing. And my question to you will be, I want to understand for you where you sit as an innovator, as PowerGen. Do you think that blended finance solutions and what Serena and others are trying to do is a solution to scaling businesses within the solar sector? Over to you, John.
Thank you, Sarah. I hope you can hear me clearly.
Yes, we can hear you.
So yeah, my name is John Kitenda. I'm a director at PowerGen. PowerGen is a Kenya-based African renewable energy utility and mini grid developer. We have active operations in 5 countries, serving over about 25,000 households with renewable power through our mini grids. So something on the order of about 100,000 individuals or so. We work in both East and West Africa and are launching operations in Central Africa. And we are very much aligned with this mission of delivering clean, reliable, renewable, productive power to the 600 odd million people on the continent who don't have access yet. To directly answer your specific question, Sarah, blended finance is absolutely essential to enabling us to meet our goals for a variety of reasons. The first is what we found in the over a decade of work that we've done on the continent deploying clean energy solutions is that we can actually provide our solutions commercially. The question is, what is the objective that we are trying to achieve? If our objective is truly energy access, and energy access for the poorest, the poor, who are the people who constitute the 600 million, then we cannot come at this from a purely commercial lens or with purely commercial capital, because it's simply not going. It will require tariffs that are going to make this unaffordable for the kind of people who we want to connect, especially if what we want to provide is grid-style productive power that goes beyond lighting a home to enabling somebody to run a business, to run a refrigerator, to run a sawmill, to run a welding machine. So if our objective is energy access and closing this $600 million gap, then we absolutely will need blended capital to come in and do a variety of things. De-risk some of the projects so that private sector capital feels comfortable coming in. Enable us to offer lower tariffs so that this power is actually consumed by the people who we connect, and bring the sector to a scale that will crowd in larger and larger amounts of capital. On that point of scale, and on I think on the request for feedback on what we've seen so far that is being structured by ISA, I think the one thing that I would say is, I know that the list of countries that was put forward was indicative, and you are still working to refine what that final list looks like. I would encourage you to put a lot of weight on countries that are going to be able to deliver sufficient scale for developers to reach economies of scale that deliver profitability. So as we look for countries that have strong regulation, that you can deploy in quickly, that have good buy-in from the governments and regulators, in our experience, scale covers up for a multitude of sins. So don't leave those countries out. because they may be difficult to work in. Because as was mentioned, I think it was the fourth challenge that was on the list. The size of pipeline continues to be, a refrain that you hear from the people that you're approaching for capital. And one of the things that was mentioned was that the fund would be looking to sort of aggregate projects into entities of sufficient size to bring in this capital. I would say that it would be much easier both for you and for the sector if developers themselves were to reach the kind of scale that they would represent individually meaningful pipeline to invest in. And the only way that developers on the continent will be able to do that is if they're multi-country and if they're operating in these countries that have substantial populations that are yet to be electrified. And so selecting countries that give us the ability to do that is really, really important, because for PowerGen, for instance, setting up a business operations in a country is purely a calculus of whether that country in and of itself is going to be able to reach sufficient scale to justify the cost of operations in that country. And so that skews us in the direction that I'm trying to skew you as you shape this fund, which I can definitely guarantee is going to be valuable. And then one last thing that I'll mention is I think you listed guarantees and first loss funds being some part of what you're considering under junior debt. I definitely support that as a something to look at seriously, because in addition to getting what we are finding is that we're able to deliver high single-digit returns to investors in the projects that we deliver. But what we often encounter are challenges that don't have and risks that don't have so much to do with the sector, but with external factors such as FX risk and inflation risk and the like, which definitely eat into the returns that we can offer to investors. So if there are guarantees that can tackle such risks, then it makes it a lot easier for us to present investment cases to capital providers that are attractive and we are finding that if we can deliver these high single-digit returns over multiple years, then there are investors that are willing to come into the sector and partner with us in delivering these solutions. So I hope that wasn't too long-winded, but I wanted to make sure that I responded to a number of the things that were requested for by the previous speakers.
Yes, thank you, John. I think you've quite given Sarin some of the input that he's looking for, and wanting a bit of feedback on the structure of the fund that they are And I've had you also mention about the productive use of energy, and that is one thing that I think is very has been key and has been in discussions when you speak about solar, that we cannot achieve the scale or the objectives until we are able to use these products and solar products for productive use, and it goes beyond lighting a home, like you've said. And I want to go straight to Mr. Assad, and I'm coming to him now because we are from John Kidenda. We've heard from him, who is an innovator. Now we want to hear from an investor, and after you introduce yourself and the company, I would want you to tell us what particular blended finance instruments are you particularly looking at when you want to finance solar in Africa, and in which segments are those in? Are you focusing on? Over to you, Mr. Assad. Thank you.
Thank you very much, Sarah, and thank you very much, John, for sort of a very good summary of the issues that the industry faces. And I think the effort of the International Solar Alliance, were quite, clear, and they are, I think the key components are there, and I think it's not magic, right? It is pretty logical. The issues really that I feel in this industry and in others that I've been part of, and I've been doing this for the last 25 years. I used to say I'm the oldest asset manager in impact investing when it was not called impact investing. It really was called microfinance, which really is the mothership of all these sectors. But now I'm the longest serving, which is as I'm getting older. So I think the real issues, the fundamental issues I want to talk about, because I think all of the, these sort of the structure of financing, it's pretty obvious. And I think most people are clear about that. But what is impeding the growth in a market, as as Jagjit said, is the irradiations. God has blessed the poor countries with solar energy. So if you look at all the sub-Saharan African countries and the South Asian countries, India, Pakistan, Cambodia, Bangladesh, these are the poorest countries in the world. They have the most solar energy. Part of the, effective and utilization really is based on the availability of it. So what is the problem then? If the availability of energy is there, the technology is there, people are willing to finance it, is there, then what's the problem? And I guess the problem is the right kind of financing and the ability and the capacity within this country. I think one of the most important factors is really developing the capacity of the institution and to have more people like John on the ground. To me, from a financing perspective, we are really betting on the entrepreneurs, right? I mean, basically, when we hitch our wagon, when we are a lender to PowerGen, when we hitch our wagon to the company, we are really attaching ourselves. So the fundamental issue is profitability versus affordability, right? I think the focus on profitability at the company level has to be there. Because if the profitability is not there, then you will see what is happening in the off-grid solar sector, where you have a high burn rate, they continue to keep losses, and they are not really, sort of standing on their 2 feet. It's, maybe it's subsidy is needed, and subsidy has to be there. If you look at even all the utility sectors, you look at Kenyan Power or Uganda Power, all of them are subsidized institutions. Even in the US, there are about 2,000 rural utilities. These are also subsidized. So one has to question as to, is this model ever going to be profitable, or is it really a utility model that has to have continuous subsidy attached to it? So those are, the fundamental issues. So if we can, in an off-grid solar sector and mini grids, you look at them, majority of the mini grids are not profitable, and they're way off from profitability because of the affordability for their clients, because of the high cost of the Mzungu sort of mentality, where majority of the people coming in are on high payrolls coming from outside of Africa, and not really, you don't have the budgets to afford that. And I think that attitude and change where you are supporting the grassroots organization. We are funding some of the largest companies last year in off-grid solar. Only 2 companies got 75% of the money. You're not creating a sector, you're creating a monopoly. If you want to create a sector, then you really have to think at the grassroots level, how do you bring the successful entrepreneurs that have the ability, how do you bring them to multiple countries, as John was talking about, or seeding at the same time, the younger generation of developers. Because it's not rocket science, really. If you think about it, John, if I'm wrong, let me know. But it is really the implementation that is the most difficult part. John, am I right or not? keeping the costs down.
Very right. Execution is everything.
Execution, and that's the problem, is that it's a lot of the companies have gotten perpetual subsidy. So subsidy, when you talk about subsidy, it's important to talk about what form it takes. You can have a grant, but it can mimic as equity, or it can mimic as a loan. So the form of subsidy is important, the capacity development for entrepreneurs like John, and keeping the cost structures down so that profitability is achieved, so that there is not perpetual need to plug the hole, the burn rates. It's more that equity is being utilized for capital investment rather than just the rather large. You look at the solar companies, right? And if you look at the large solar companies, some of them have failed. So when I started, and I apologize for a little bit of what I say forbearance. I've been investing in this sector since 2010. I was the first fund manager, and at that time I was a managing director, global head of social investment funds at Deutsche Bank, where I really started this business at Deutsche Bank, which was really mostly CSR sort of function. But for me, money was green. I was doing what I loved. And so I think the ideas around, really speaking honestly about the issues. 2010, I had made a $4 million investment to Delight. After 15 years, companies in the off-grid solar sector of getting hundreds of millions of dollars are still, breaking even or profitable, and they're not meeting the requirements, of the venture investments. This will maybe explain to you what I'm talking about. Once when I was at Deutsche Bank, I got a call from a venture capitalist about microfinance, because, as I said, that was the mothership. And he said, "Oh no, you want to be there. We want to be the first mover advantage, and we want to sort of take advantage of the first mover. We're just gonna there make high profits, pump growth, because growth brings value." So when I talked to the CEO of Movisol, that has unfortunately one of the largest off-grid solar company that is no longer with us in that original form, he said one of the factors was that there's so much pressure on growth that we weren't focused on the making the business profitable, making the unit economics work. Those fundamental questions, were being ignored, and the story was, well, we want to grow and we want to do that, when you can not grow if your unit economics are not working. So I think the fundamental issue in terms from a finance perspective really has to be that the business model has profitability at its core, that you have capacity development for the entrepreneurs and seeding new ideas and seeding new people, like Jagjit has talked about. He's training 300 bankers, but also besides bankers, because bankers are the most, being a banker myself, I can say are very conservative and useless people, really. What you really need is entrepreneurs like John, and at the grassroots level to create institutions, because bankers are conservative. If you look at the balance sheet of all the banks in Africa or in Asia, 80–70% of their assets are in government bonds. They're not investing in John. They won't invest in John, because they will invest when John becomes quite healthy and he probably doesn't need their money. They'll be ready to invest. So I think that idea of enabling environment, that's where International Solar Alliance can play a role. It's not one entity, but it is a partnership that creating enabling environment, dealing with the issue of local currency versus foreign currency. These are all questions for us as an investor. We get all our money in dollar terms, and we get it from development banks, and we're not allowed to take local currency risk. How do you invest in Zambia or Zimbabwe, where you have expertise, expatriation risk, and things of that nature. Why can't we get the World Bank to issue local currency paper in these markets so that we can have local currency financing and these companies are not dealing with a tremendous amount of open FX exposure? So I think from a financing perspective, we really need a lot more of John's, and we need a focus on profitability. And I think once you have that, I think the money, like what Jagdish was saying, there's so much money to be ready to be deployed or to be deployed that the real bottleneck is the right type of capital to seed this industry and to really do it in a way that focuses on profitability. And then I think you will see a lot of capital coming in. I mean, the truth is that there is no alternative solution in Kenya, in Africa. People don't have a sense of what Africa is. You can fit the United States in one corner of Africa and China in the other, and you can fit a lot more, continents in Africa. It's so massive of a country, of our country. That's also known in America that they consider Africa as one country. But it is really that element of sort of thinking innovatively to how to really seed the sector. And that mentality I don't see. I really don't see about taking local leadership, local people, keeping the cost down locally in local structures. I pay more in salaries in Africa than I pay in India. The talent pool, I have people in India, I have people in Pakistan, I have people in Uganda, in Kenya, in Nigeria. I pay the most in Africa. Why? Because there is this class of cream of Africans that have established that market. If you go down and leave that cream, there's tremendous amount of unemployment. If you look at the Makara University out of Uganda, 80% of the students don't get. So why don't we train them? They're smart people. They just haven't been given the opportunity. So that the cost structure can come down. Why is that I have to pay more in Africa for people than I have to pay in India or in Pakistan? Literally, half what I have to pay. And that's the reason, is because the capacity and the limited focus on a particular segment of society and not thinking about local solutions. And that's what my recommendation. And those things are really related to financial aspects, is what I have mentioned. Sorry for taking a bit longer, Sarah, but I think these are fundamental issues that I speak about.
Thank you. Thank you, Mr. Assad. I think I have allowed you to take a little bit longer since those were your opening remarks. And I have had Mr. Assad talk about profitability versus affordability. He's also mentioned about the FX risk that is very apparent, and especially for countries like Kenya and Zambia. And luckily, our next speaker is from Zambia. And I'm sure, Muka, you are relating to a number of things that Assad was talking about. And so I want to hear from you, what are the risks that you see as an entrepreneur within the mini-grids business model? And this I want you to look at in terms of the financial and operational perspective, as you also introduce your company to us. Muka?
Thank you, Sarah. Can you hear me?
Yes, we can hear you loud and clear.
Okay, great. So my name is Muka Mutanuka. I'm coming from NG Energy Access, which is a special purpose vehicle that the NG Group uses to deliver access to energy to millions of households within sub-Saharan Africa. So we have operations in 6 countries where you actually notice solar home system and mini-grid provision as alternative solutions to electrification. So in terms of the question that Sarah has asked, mini-grids do provide an alternative to the electrification, which is typically through the main grid in most African countries. But if you look at the economics in terms of extending the grid and setting up a mini grid infrastructure that will have a generation source and distribution, you'll notice that the mini grid is much more affordable than the main grid. But the fact that it's affordable makes it a bit difficult to finance, because usually investors would not see the need or justify hundreds of investments for disintegrated systems, so to speak. So usually what happens is that you notice that this scope of activity within the sector is really quite nascent. And the fact that it's nascent is not surprising that the commercial sector would not have financial instruments that typically respond to the complexities and specificities of this particular segment. So the typical financing instruments would typically have a 10-year period that does not speak, of course, to the revenue flows that would be generated from that mini grid installation. And agreeing with what Asad earlier spoke about, most of these capex will be a high upfront installment that would obviously come in a vehicle currency like USD or Euro, but then the revenues that you'd actually be getting will be coming in local currency, and they're prone to inflation, they're exposed to FX, all of those risks. So you find that when you put those together, it's very difficult to get a business model to fly because of all those uncertainties and sensitivities that make it practically impossible to make the unit economics work. In terms of operations, of course, this is a low yield customer base, and of course the consumption would be very low in most cases. So you'd find that the mini grid operators have to provide much more than the electricity access. They have to become a development partner where they bring in the right kind of linkages, partnerships, synergies to be able to catalyze possibly productive uses of electricity. Aside from that, this activity is quite nascent, so getting optimization in terms of the actual technical solution that is provided to be able to minimize the OPEX and bottom line figures is not something that happens overnight. There's a lot of mistakes that have to be made along the way and a lot of learning, which unfortunately or fortunately within the industry, there's very limited time frame in terms of years of operations for most mini grid operators within Africa. So typically, the scope of risks from a financing and operational perspective that
thank you, Muka. I'm not sure whether it's from my side or we had a bit of challenges with your connection at the end. And thank you for your insights. And I've had Muka at very mention about the investments. I think this was following up even on what Asad said. Investment is in foreign currency, but you are now getting your repayments, or your customers are repaying you in local currency, and this becomes a big challenge. I want to come back to Mr. Sareen, and I want to ask him Sareen a question, and the question I have is how is the International Solar Alliance working with the governments in Africa, and how are you collaborating with the governments? Because we have heard from Muka, we've heard from John and Asad, and we are really getting that there are a number of challenges that are within policy and some that can be resolved through interventions by the governments. How are you working with the government? And what are there any plans on policy interventions that are coming up? Over to you, Sareen.
Sure. Thank you, Sarah. Before I answer you, I must acknowledge the very useful insights which colleagues have provided in the last 45 minutes. Thanks to Asad, John, and Muka. That got me thinking on many of the issues. So thank you very much to my fellow panelists. And that's precisely the thing I was looking for. So let me now answer your specific question. How is ISA adding value in the space of various international organizations trying to help member countries? We are the newest kid on the block. We got birth in 2015, and then, really got going in 2018. So it's only 4 years we've been into being. So what is our plan, and what has been our initial successes or learnings, and how are we going to go forward? So in our ecosystem, what we've started doing is to better understand the policy and regulatory challenges as far as solar investments are concerned, and get a good handle on that. So what we did was 3 years ago, we started, many of your audience may or may not have heard, we annually publish what we call Ease of Doing Solar report. It may sound closer to ease of doing business, which it is. It's based off the basic methodology, but then customizes it to look at a policy and regulatory environment and investment environment for solar investments in all our member countries. We started with 4 countries, then 20, 80, and now we are covering about 93 member countries. And most of our member countries in Africa, about 48 of them are covered in this report. So every year, we do secondary analysis, primary data collection, talking to policymakers, regulators, and stakeholders in our member countries to get a sense of how the policy regulatory environment is improving or deteriorating, how they are flaring on the commitments they have taken upon themselves in international fora, ACA, UNFCCC, in various other commitments they are making to various bilateral, multilateral funding agencies in terms of sectoral or policy regulatory reforms, so far as renewable energy, in particular for us, solar energy is concerned. From there, we start a good understanding with the governments, and in our case, our counterparts are renewable energy ministers, and the senior bureaucracy there. We begin a dialogue of starting from the technical potential, a good assessment of their policy regulatory environment, and say, okay, this is where you are. And if this is your direction of travel in terms of a national solar roadmap, there are policy issues, there are regulatory issues, financing issues, and capacity issues in terms of capacity at all places of value chain of solar, from regulatory side down to technicians. Where could we come in as ISA, as an institution, and where could we bring our partners? And we have partnerships with variety of DFIs, MDBs, you name it, they are our partners. We're trying to figure out how we bring their capacity to bear on this. So let's take a typical example, I'll start from one end and go to the other. So for Senegal, they submitted a demand of solar water pumps of 5,000 variety capacity. We send a technical mission there and say, okay, you have an agriculture bank which could issue further guarantees and concessional loans to entrepreneurs, provide concessional finance, who can then sell it to farmers on a deeply concessional rate. And we will come build an ecosystem where there are mechanics trained to take care of maintenance of this, and we will bring international price discovery for these solar water pump capacity, so that you discover the price, which is way cheaper than the prevailing price. We got it down to 40% reduced price than that was prevailing there. Then we send sector teams, people who do assessment for them, and help structure a national program. And then we bring various financiers together. The other side is countries like Egypt, and they have refined policy environment on a variety of issues. And they are sitting at a solid pipeline of projects which could then be financed. And there our intervention now, which is work in progress, is issuance of solar bonds. So we are working with the World Bank, IFC, to see if first solar bond could be issued for Egypt, which would then finance a variety of projects from solar rooftop to water pumps in Nile to large utility scale and others. So what we do is, horses for courses, as they say. We analyze the country situation. We work with governments to vet that they agree with the diagnostic. Then we put a policy, as we say, technical and financial package together for them, which is very modest. We are not a membership fee-based organization yet, so it's purely on voluntary contribution of our members and foundations. We have a modest budget of about 25 mil a year for this year and growing. So we provide very modest technical assistance packages, but we send experts to governments. We are trying to help them with PPA negotiations, tendering, auctioning, and backstopping them in designing regulatory and policy frameworks, the enabling environment, which Asad talked about, and training them. He talked about training new entrepreneurs. That's an initiative we really want to push now. But on the policy and regulatory side, for the last 4 years, we are sponsoring mid-career fellowships for policymakers from Africa. So by now we have trained about 70 mid-career professionals from Africa who were here in IIT Delhi for 2 years of masters, have gone back and placed back in their renewable energy ministry with enhanced capacities. And they worked with ISA, they worked on various projects and solar industry. And now they are somewhere in the mid hierarchy of their policymaking machinery. So those are the interventions in our own modest way. We are trying to build or enhance the enabling environment, build the capacity at all levels of solar value chain, and trying to bring financing packages together. Again, we don't have the money, but we are talking in the right language to the right financiers with right financing structures. I hope we will be successful. Thank you.
Thank you, Sareen, for that. And I had a follow-up question, which I'll want you to answer in a minute. And the follow-up question is, any best practice that you can mention, like any country in Africa that you could say, I think we've made strides in this country in terms of the policy framework?
Sure. So, in India, there's been success in utility scale solar power plants in Riva project, in Pavagada project in Karnataka, big scale. And we have learned how you can templatize various contractual structures, what government could do in terms of pooling the land and clearing it for investors to come in, and various risk mitigation structures. So we took these lessons in partnership with the World Bank, and in fact, IntelliCap is helping us curate these messages, these experiences, and take it to Africa. So in Mali and Niger, we are working on 300 megawatt of capacity using these standard templates, these policy frameworks, which have been tried and tested in India and have worked, to see if we can use them there. So now these project ideas are at a tendering stage. So we worked with governments in implementing, customizing these standard policy frameworks, which have worked in India, customized to the needs and regulatory environment of these two member countries, and worked with them. Now it is at tendering stage. So those are the few ways we are bringing best practices from one southern country where the context is more or less similar to Africa. I think the South-South lessons are more important. Telling, I'm just using Germany as an example. German rooftop example may not be the right example for Zambia. But, Indian Madhya Pradesh rooftop example may have the similar constraints and evolution history, let's say in Kenya. So I think we are trying to see where the right examples could come in with a bit of a curation and hand-holding. Thank you.
Thank you, Mr. Sareen. And I think what I'm hearing from you is we need to look at jurisdictions that can borrow from each other because of the conditions. So looking at where India is and some of the African countries, and there is a lot to borrow and replicate or even customize for the various jurisdictions in Africa. So I want to go to John and ask, and I will now limit your time to 2 minutes so that we are able to cover the issues that we need to cover. And thank you. I can see there's a lot of discussion ongoing on our chat platform. Keep the discussions going as we continue with this very exciting discussion. So, John, listening to what Mr. Sareen said and the other speakers, you've heard what Asad has said in terms of investments in Africa. Where do you see the mini grids and solar, and specifically solar industry and sector in the next 5 years? Where are you sitting? Do you think we are getting there in terms of the finance, access to finance? And here, remember, we are really focusing on blended financing. And we are also looking at the policy framework. So where, as an innovator, as a power gen, and now as John, who's been sitting in this sector, where do you think we are going in the next 5 years?
I'll try to be brief. I think we're making progress, and I think that we as a company are going into a funding round as we speak. And I think the environment now, it would be disingenuous to say that the environment now is similar to when we were doing, our Series B or Series A, 5, 10 years ago. There has been progress. People understand the investment class a lot better. There has been growth of entities that are investable, but it's not growing fast enough, because the problem with the challenge that we're trying to solve is that it is not standing still, right? it's growing. So there's a growth rate for the problem, and there's a growth rate for the sector that's trying to solve the problem. And I think as we stand right now, probably the growth rate for the problem is higher. So we can continue at this rate and end up with a larger problem than we started with 10 years from now, right? So we need to accelerate. And I think just in brief, what we need in order to accelerate growth is smart investment with blended financing that is delivered, targeted to solving some of the key challenges that we mentioned here: FX, inflation, the need for scalable packages of projects specifically targeted at these issues. If we do that, we'll make progress. And I think one thing that I think everybody else on the panel has given incredible insight, and I just want to say that before I continue. Muka, Assad, Mr. Serene, all really great inputs. I think one thing that Assad mentioned that may have flown by that I want to highlight is that how the subsidy is delivered is almost as important as how much or what subsidy is deployed. I think if you structure the financing into corporate financing that makes it possible, that does not dilute the incentive to create a profitable business model, then we will have the type of growth trajectories that can actually solve the problem. And so I guess the parting shot is like, let's think about as we recognize that, utilities all over the world are subsidized. As we think about, okay, how can we bring in concessional capital to make these attractive for private sector players? How that capital is deployed is really, really, really important. And in my personal view, I think really thinking very carefully about delivering it into corporate structures that are multinational on the continent that can then translate that into lower tariffs for customers and the ability to serve larger populations is the way to go.
Thank you, John, for trying to keep it brief. And I hear John saying our challenges are growing faster than the solutions that we have. And I tend to agree with those sentiments by saying that there must be a change in terms of how we respond to the challenges, especially in Africa. And I know if you look at the conversations around solar, there are conversations on return on investments, which is what I think Muka mentioned, saying that there is no patient capital for the sector, where everybody is looking at what is the return on investments, yet the sector is not growing at that rate. So I want to bring back the conversation on financing, and I want to call on Assad one more time to just ask what role is SIMA Fund playing in the Green Climate Fund, and specifically I'm looking at the Energy Access Relief Fund. What role have you been playing about in that? And maybe you can speak around the Green Climate Fund, Assad, in 2 minutes, so that we can have another round of discussions.
So thanks, Sarah. So I think I'll address this issue specifically on the Energy Access Relief Fund. This was a facility that is close to now, more than close to $90 million that was established by CDC and FMO and DFC, and also GCF has about $30 million invested in the facility. And this was organized around providing financing for liquidity purposes for companies affected by COVID. And this is in my 25-year history of doing impact investing. It's the first time that out of a fund of this size, we are going to do about 100 loans to small companies. And really, this is a very, sort of subsidized financing, because it is subordinated, unsecured, and it is at between 4 to 5% interest rate, and it's meant really to bridge the gap. So most of the companies are affected by COVID. the challenge of, if you look at cost of lithium carbide has increased 7 times. The cost of shipping has increased. Everything has increased. So all availability of inventory, is difficult. So when you have larger cost structures, then you have lower margins and you have higher burn rates, and you have seen companies in deep trouble. Large companies that were sort of the cornerstone of these. This financing was structured in I'm very proud of the fact that we are innovators. Throughout my career, I've done things on the cutting edge to do difficult things. And we were able to structure a financing structure where some of the larger fund managers walked away from it because it was a difficult thing to do 100 loans. But we did it in a very templated approach of underwriting. So it was not that difficult, but we still had to underwrite because we are making a loan. And I'd encourage people to just visit our website, and you can see the process is fairly simple. We still have some availability of capital, and within 2 weeks, once you complete your application, we'll let you know if you'll get the money or not. But since there is quite a large line, there's some difficulty. But this facility came together at a point of a challenge. And I think that the urgency of seeing the challenge in the off-grid solar sector, and I mean broadly, is important. And to the work that Jagjit can do is really sort of looking at it at a pivotal time. ISA is coming about, when there's a real crisis in the off-grid solar sector. You can bury your head and say there is no crisis, but there is a crisis here, and we are convening an industry effort around this. Because I've done that in microfinance. When in 2010 in India there was a whole crisis around microfinance, and Jagjit, you'll be happy to know that I was the first investor in Indian microfinance. Now everybody knows about microfinance, but when I invested in India, but I did the same in Pakistan, because I'm originally from Pakistan, so I did it both India and Pakistan. But I think that what I'm trying to say, Sarah, is that we have to be honest about the problem and find local solutions with local people involved at it, in terms of, and I think the role, Jagjit, for you is really in terms of making sure that the organizational structures that you're creating are efficient. Is a lot of times they're very good meaning people at the development banks, but they are sort of tied up in so many requirements, so many things, that it is very difficult. They want everything and they can't get they're not nimble. And I think if you're going to have a development impact of the scale that you're thinking about in an environment where capacity is limited, being nimble, being able to make quick decisions, and then being able to use your intelligence to solve problems without umpteen layers of bureaucracy, then you're not going to do effective. And I think that is a very real struggle for ISA, and I'm sure, Jagjit, you're well aware of it. But that really, to me, is the idea. And there are examples like the Energy Access Relief Fund, which came about with the Rockefeller Foundation, Shell Foundation, IKEA Foundation, the World Bank, IFC, USAID, FMO. All of them came together to solve a problem. We solved it with GCF. GCF has 7 approval committees, 7 layers of approval committees. So it is, the great people, the people, they are very smart people. It's not that the people don't know what they're doing. It's the organizational structure that is limiting it. And that's the truth. So I'm not sort of trying to say that it's all is wrong, but I think the efficiency of the structures, addressing the needs of the market, taking first loss risk. None of the development banks take first loss risk. I have 25 years of banging my head against the wall, saying that, good, your money is coming from the government. It's not fiduciary money. You should be taking first loss risk. You should be, on the outer edges of the branches, seeding change. And if you can do that, Jagjit, with the ISI, then you are filling a great vacuum that is lacking. Because they are there, they have requirements. It's not, I'm saying that they just have requirements to not take that risk. And you cannot develop a new market and seed it without taking risk. So I think what I'm trying to say to your question of GCF financing, I think there are, lots of capacity, but being nimble, being true to the problem, and not having, bureaucracy is part of life, but having the ability to at least take decisions quickly, I think is a key to success.
So Sareen nodding, and I know some of us will need a masterclass on investments after this from you, with the wealth of information and knowledge that you have. And I've had you speak a lot on local solutions for local problems. And I want to just go to Muka before we go to the floor for questions. Utsav, you could check the questions on the chat box so that we can respond to a few questions. I'm aware that we have just about 8 minutes remaining. So Muka, looking at the discussion that has been going on in terms of the opportunities and challenges that are there in terms of access to finance for this sector, I am drawn to ask you your thoughts in terms of blended financing and the support these can offer to mini-grids projects like yourselves and others. And what are the success factors that you see, maybe one or two success factors that you see within the mini-grid sector, and especially that could be catalyzed by blended financing? Over to you, Muka.
Thank you, Sarah. I'll try to be as brief as possible. So what blended financing is able to achieve are typically viability gaps that you'd notice with traditional financing instruments. In this context, typically the financing that would come in form of grants or equity at a certain point would cover maybe just the last mile connection. But what happens immediately after the site has been commissioned and there's operations to work with, and obviously the service level that will be provided to the customers, there should be a guarantee or a mitigation of risk in terms of the cash flows that are already exposed to FX, CPI, and things of that nature. So there's a number of successful projects. I understand PowerGen, for instance, is working with CBEA, and we've seen that happening in countries like Nigeria, Zambia, where I'm sure that would help in terms of improving the economics and also the viability of the business models that we present for this electrification solution. And also in speaking to that, I think there's need to be for governments to be a bit more deliberate and intentional in terms of various aspects that should then help in creating an enabling environment for this electrification solution to thrive. So it's a capacity requirement on the side of the financiers also to typically try to understand the modalities and complexities of this kind of business to be able to assist it in getting to a point where it ramps up. So this structured financing in form of blended financing allows for aggregation of these seemingly small solutions into a pipeline that would be able to get it to attract, for instance, infrastructure loans, and also that would actually typically help to de-risk or reduce the exposure of would-be equity partners or local investors. In that context, I feel I can submit. Thank you, Sarah.
Thank you. And I think, Sareen, your work is cut out for you. As you're raising the funds, you can hear we need guarantees. And there is a message in terms of de-risking the sector, and that is what blended financing is all about. So Utsav, I would want to first go to the floor before each of the speakers, I'll want you to prepare just a minute of closing remarks. I know we had so much we'd have wanted to cover, but time is limited. So we want to respond to a few questions from the floor. And Utsav, a few questions from the floor.
Sure. We had a question from Omar. I think Abhishek also addressed it in the chat, but I'd like to open it up even for our panelists. What is the learning taken from other sectors like agriculture, health, in which blended finance has been deployed sometimes? This is a question from Omar. And the other question was from Mark, who spoke about since the solar sector is so diversified, and we're looking at the IPP, the CNI, the mini grid, how do you kind of define the different solar segments? Yeah, the question is all this. Perhaps you can start with the first one.
Okay, I will. The first question, lessons from other sectors, I'll want to throw that to Serene and ask what other lessons do you think we can pick from other sectors?
See, let me address it from this vantage point. While the lessons from health sector and ag sector and others where blended finance has come in, the issue we are struggling is what, Asad has put it beautifully well, is affordability versus profitability. And I tell you, I've been in this space of MDBs and climate finance about 20 years now. Nobody at the end agrees with a climate risk adjusted return. If we can all agree that, whatever you're investing in this sector, access, security, transition, you could accept a climate risk adjusted return, I think half the problem is solved. Still, we are looking at, commercial level IRRs. In ag sector, there was a lot of grant money pumped in through blended finance structures, and we saw the uptake. In health, there were big foundations bringing in loads of capital through blended finance structures, along with sovereigns and DFIs we saw. Here, the issue is twinfold. One is the climate crisis and where, the equation changes. If your agriculture productivity, and I'm going a bit off script and not in my official position as ADG of ISA, let me put my personal views, because this is very important a question. That, in ag, if your crops suffer, people in America are not really hit, or in Germany. But if you don't mitigate, there are going to be more floods in Germany and in the United States and in Australia, wildfires. So what we are trying to suggest here is don't ask for commercial rate of returns on your investments when you're investing in clean energy solution. You should be asking for climate adjusted returns, which should be lower, much more subsidized, so that clean energy space grows multifold in this decade. See, the message we are putting across loudly from our vantage point at ISA is this is the decade where you're going to make or break. We're all going to be toast afterwards. We would be looking at returns while our houses would be flooded. So, interesting enough, the kind of struggles we are having putting this facility together, everybody is saying, prove the additionality of this facility. And we are saying, 700 million people don't have access to electricity, and they wouldn't be like that by 2030. You're still asking for additionality. There's not enough capital of such nature, which we are trying to put together in this space. But, you go to investors, they say, what is the IRR? Where's the additionality? Where are the projects? Nobody wants to go where Assad wants us to go, is take the risk, create markets rather than supporting monopolies, and bring the first class takers. And that's precisely what we want to do. So, while there are lessons from other sectors, I cast this sector in its unique value proposition, you say, or the crisis we are in. We should be looking at climate risk adjusted returns and bring subsidy to bear so that clean energy moves at a rapid pace in Africa and beyond. It's not precisely answering your question in terms of lessons, but I think the real lesson is we don't have time. Let's move with the subsidy required for the right kind of capital, for the right instruments for the renewable energy sector in Africa to begin and then beyond. Thanks.
Thank you, Serene. I think what I'm hearing from him is that we cannot treat the solar sector and the energy, the renewable energy sector, like any other sector. There are peculiarities of this sector that we have to be cognizant of. And I think I am cognizant of that as a climate investment advisor, where we have to keep on building the capacity of investors within the sector to understand what we mean by climate risk-adjusted returns. And that is what I think is the conversation also within catalytic financing of solar products and solar PV. And John, I want you to respond to our other question, and that's the definition of solar segments. I think Utsav can maybe take that question once more so that John can respond in 1 minute. And I know we are going over our allocated time, but I'll still give each of the panelists a minute after this. Please put your thoughts together so that you can say your closing remarks after John. John.
Yeah, I don't know if I can tackle that. I think the solar sector is a bit too broad. There are specific solutions that constitute the sector. I work in one of them, which is renewable mini-grids. Other people work in others, whether that's solar home systems or grid-scaled solar. So I think what has happened that has improved significantly over the past decade or so, is that these subsectors are better defined. We understand what we mean when we as PowerGen speak about delivering grid quality power using solar mini grids. And so I think the definition needs to be done maybe a level below solar sector as a whole, and to have asset classes that are easily and intuitively understandable by investors. And so that when you speak about investing in this subsector, everybody knows what you're talking about. And I think we've improved, and we'll continue to improve as we see more and more examples of entities reaching scale.
Thank you, John. I think I'll just now straight go to the closing remarks, and I'll start with you, Mocha.
Thank you, Sarah. So in terms of blended finance as a scale-up option for the renewable energy sector, I believe, and it's my considered view, that we cannot underestimate the importance of these structured financing mechanisms. And I appreciate the value that has come from the speakers coming in from the investment segments, which underscore and align with our objectives to actually provide electrification access. Structured this way, I believe the transformational impact of renewable energy mini-grids via this mechanism is one that cannot be underestimated. And I believe through this transition and trajectory, we'll be able to meet Vision 2030 objectives and also provide an opportunity for millions of Africans who do not have access to reliable and sustainable power. Thank you.
Thank you, Muka. I think next on my screen is Mr. Assad. In a minute, your closing remarks.
I think this was a interesting session, and I really wish Jagdeep all the best. And anytime if I can be of any help, let me know. I think the solutions are in people like John and others, and I think that the paths to the solutions are clear. It's the implementation and going through our own limitations, and we are all living in a limited world is the real challenge. Is to really sort of get our will to do it, like Jagdeep has talked about, without regards to so many. It's so easy to say no. It takes a lot of courage to say yes. And that's really what the core of the issue is. So I'd leave it at that. If I can plug in, I have started a conversation on LinkedIn with some of the pioneers in impact investing that are on the private sector side, like JP, who started Blue Orchard, and people who started Symbiotics, and others that have been pioneer in impact investing. So for younger people and for entrepreneurs like John, it'd be important to hear that. So I'm just plugging it in. It's on my LinkedIn page. So please do take a look.
Thank you. Sorry.
Well, first of all, thank you, Sarah, to you for really efficient moderation of this discussion. I have taken detailed notes, and it's been very instructive. And I'll call on many of you as we go along in designing this facility, every one of you, to help us put it together and get it capitalized. On a lighter note, Asad, would you mind telling the name of your cat you're holding?
This is, her name is Taffy, and she's 19-year-old, so quite old. So she just, I don't know, she meowed, and I had to pick her up because she likes to be hugged. And so she's diabetic on, all sorts of, I have to 2 injections a day, and then she gets a drip on the weekend. But my wife has kept her, going. So she grew up with the kids, so it's like a part of the family, Thank you.
These are real treasures of life, I tell you, in this world of webinars and Zoom, this is real treasure moments. So thank you for bringing that in the discussion. Thank you. That's all I have to say, Sarah.
Thank you, Sareen. And the good things about Zoom is we get to meet family members we'd never have met, like the little cat. It's not little, I think. It's 19 years old. John, your closing remarks.
I'll just thank the rest of the panelists. I think I've learned something from every single one of you. Muka, I really enjoyed hearing you speak about your experience. Asad, definitely Taffy, Jagjit, and I will also second Jagjit's comments about your moderation. I think you did a good job of corralling very loquacious people. So thank you, and I really appreciate it.
Thank you. I want to take this opportunity to thank all the panelists for taking your time off your busy schedules, for just giving us those thoughts. And I think I take home the words of Asad, say that it's easy to say no and it takes courage to say yes. And I think in this sector, that's something we need to think about, that you need to be very courageous for you to be able to invest in this sector. And we need to all put our efforts and be behind what Sareen and the team at the International Solar Alliance are doing. And this is the beginning of great things for Africa. And I believe that the 600 million people that are called energy poor, this is going to be something different in the coming years. Thank you so much to Intellecap for giving us this platform to have this discussion. And I believe we will continue having the discussions. I've seen that we have our various LinkedIn handles put on the chat box. Kindly connect with us and also keep on connecting on the networking platform umbrella that has been provided for us by SunCal. This has been a very insightful and very, very, very enriching discussion. Thank you everyone for participating and taking your time to be with us this day. Thank you so much. Thank you.
Thank you.
Thank you.